All right, let's take another caller. Mary in Richmond Hill, go ahead.
Hi, thank you for taking my call. My question is on gold, and if David still holds Franco-Nevada in the portfolio. Thank you.
That's a great question. So, Mary, there's been some technical damage in gold over the last, I guess, 2.5 months as the U.S. dollar's firmed up a little bit. The sector as a whole has seen deterioration in breadth, so lots of stocks have broken down quite badly. If you had to own one, Franco-Nevada is the one you probably want to own, because really you're buying a royalty stream, and I think that that's pretty attractive. So you're getting a yield, and the yield will grow over time. Now, gold is probably into some support here. If it's going to rally, it's going to rally from here. So if I held gold securities now, I would hold them and look for a rally if we break the lows in either the metal itself or in the index, like the XAU or the GDX and the ETF. I'd be prepared to make an exit. The good news is there's a lot of different sectors that are doing well right now. So, you don't have to be too focused in one group. But I think you're okay with the Franco-Nevada.
Do you own it still? I think
yes, we do.
That? Okay, you do. And let me just ask as well, because some viewers do look for thoughts on Silver Wheaton. So silver
Wheaton, we don't have a position in. It's sitting also right on support. It's basically sitting at the 150-day moving average. It had a move down, a consolidation, another move down. It's still trading better than 70% of the companies in the S&P over the course of the year, because of course it had a big lift at the beginning of the year. Given the move that you saw in gold early in the year, it's not unreasonable to think that they could consolidate here a little bit. So again, this is a company that I could own if I wanted to have more exposure to the precious metals.
Okay, let's take another caller. Kirk in North Vancouver, go ahead.
Yes, thank you very much for taking my call. I hold an exchange-traded fund in the healthcare. It's very general, all the big names, no surprises. Bought it about 6 months ago, was up a nice 15%, and the last 2 months I've pretty well lost all of my gains. I would like to know your position on the sector. I know Hillary has been creating some problems. Should I best ignore those problems and just let it ride up again, or are there issues here that I should take a little more seriously? Okay. I'll hang up and listen to your answer. Okay. Many thanks.
So Kirk, this is sort of a multifaceted question. The first thing that I would say is that clearly we are now, 3 weeks from the election? So those who have been concerned about a Democrat in the White House have probably been sellers through this period. So there's been recent pressure on the group, as you've just made reference to. So realistically, there has been some profit taking in the group. The second thing is it comes down to the fund that you're in. If it's an equally weighted fund in every group within healthcare, then you get more impact from the sector itself. I think actually what's been happening is creating some great opportunities because, for instance, in biotech, there's a lot of people who are invested in biotech by owning the XBI or the IBB ETF. And when they sell it, deciding to get out before the election, they're selling every security in the portfolio, good or bad. So if it's an actively managed fund that you're in, there are some interesting opportunities being created because some great companies have been sold off with the ones that maybe have some risk in it. So it really comes down to your time horizon. I would say at this point, I would probably not be a seller of healthcare so close to the election. I think that there's a lot of news that's been built into the market, a lot of expectation. We'll get more information as we go through the election. I think maybe the pressure comes off the group.
Okay. Let's take another caller before we head to break. Rose in Toronto, go ahead.
Catherine and David, thank you for taking my call. I am mostly invested in the U.S. stocks, and I've recently sold 2 stocks. I'm in a cash position. I'm reluctant to purchase anything at this present time because of the uncertainty. But the one company that I may purchase and would like your opinion on is Badger. What do you think of that company?
Okay. So, Rose, just the first comment relative to what you were just saying a moment ago. This is something that I hear, I don't want to make investments when everything seems so uncertain. If the underlying behavior of the market has been constructive, in other words, there hasn't been deteriorating breadth and a lot of sectors breaking down badly, given the concerns, then there's been a lot of sellers not doing any damage to the market. And the moment you think there's nothing to worry about, your opportunity is lost, right? So this is actually a pretty good time to be making investments while there's lots of people who are concerned and nobody's chasing anything. Now, if you look at Badger has had a nice move off $20. It's moved to $28. We're very close to the high for the year. I think that this is a company that can do well going forward. There's a lot of discussion around potential fiscal stimulus in different parts of the world. And so spending on infrastructure and construction could be stronger over the next couple of years. And I think that they play into that theme. So I would have no problem owning Badger. We don't own it, but probably should.
Okay. Let's take a quick break here. We're going to be back with David Burrows. He's President and Chief Investment Strategist of Barometer Capital Management. Taking your questions about North American large cap companies, you can call us toll free 1-855-326-6266.